Hey, what's up YouTube? Crypto Clay here, and there is a lot to unpack in today's video. We're going to be talking about the market specifically and doing it in a more macro environment. So we're going to be talking about inflation. We're going to be talking about the value of the US dollar. We're going to be talking about what we've seen previously in the past, and we're going to be talking about crypto because this is a crypto channel after all. So the first thing that I want to talk about today is this article that I was reading this morning. There were quite a few posts on Twitter talking about this. Another crypto lender known as BABL has frozen all withdrawals, similar to what we've seen with Celsius and a couple of others. And what this shows really is that it's not just one or two of these startups that are in trouble right now. Luna depegging or UST depegging really put a hit out on a lot of these other products that were, using assets like that as collateral for their own products. And so because of that, we're starting to see a lot of these other startups that are struggling to make ends meet, suffering with liquidation of a lot of their assets. And I'm not speaking specifically on any one project here because I can't tell you what's going on behind closed doors, but I think what we're going to see in the next few months is a lot of these products that are currently on the market will be closing their doors forever, filing for bankruptcy, and shuttering all instances of their applications out there. So it's a really scary time for a lot of these, but crypto is going to be around. I don't think long term that this is going to have a deep negative impact enough to where crypto can't survive. Bitcoin and Ethereum will still be here thriving, I think. And that's just one guy's opinion, but that's just my personal opinion. This guy on Twitter said BlockFi will undergo a liquidity crisis by the end of 2022, 90% certain. BlockFi has already lost substantial amount of money in 2022, 101% certain. Here's a thread to investigate and explain WTF is going on with BlockFi. And he wrote a really long, articulated thread talking about why he thinks BlockFi is going to be going through this liquidity crisis that he calls it. And I'll leave the link to this in the description below so that you guys can read it for yourselves. There is a lot of arguments in here that I could definitely see happening. BlockFi's CEO has come out and said that they don't have a problem, that everything is business as usual, but Celsius said the same thing a day before they froze all withdrawals, so we'll see what happens with that. Kevin O'Leary, for a lot of people, is this magnet for investing. He's on Shark Tank. He's talked a lot about the crypto industry, and he seems to think that the crypto market is in for more blood in the streets. And I tend to agree with him there. I think with a lot of these projects that we've just covered, we're going to see the crypto market take more of a dip before it starts rising again. And it could be a year or two. We have no idea what the timeline is going to look like on things like this, especially if we see billions and billions more shed from the crypto market. So that's something to look out for. I know a lot of people are saying buy the dip, buy the dip, buy the dip, and you could start dollar cost averaging here. The fact that we're seeing numbers that were all-time highs in the last bull run again is a clear indicator that we are in uncharted territory. So it could be a good time to buy, but it also could not be. You really need to be careful right now. These are very unsettling times as far as the crypto industry goes. And the world economy as a whole. The United States is not the only country struggling right now. But that being said, I wanted to talk a little bit about inflation and what that means for you guys, because what you could buy last year is not at all what you can purchase this year with $1. And what we're seeing with the CPI is 8.6% is what they're trying to tell us is the current consumer price index, right? That's what they're saying. So they're saying that inflation is currently at 8.6%, but if you actually look at the chart data for May of 2022, it's at 12.6%, which is much higher than anything we've seen in over 40 years. So these are things that we need to be breaking down. Gas prices, food prices, energy prices. Those are the things that we really need to be breaking down and taking a look at, and not just the overall number that they're presenting to us with this 8.6%, because they're throwing in numbers like apparel. Well, obviously, nobody is buying apparel right now because nobody has money for that. So, of course, inflation is lower on those types of items. And so you really need to dig deep into what it is that the government is trying to present to show, oh, everything is sunshine and rainbows. It's not. And you really need to break apart each piece. Take a look at gas prices, take a look at energy prices. So right now, more realistically, 12.6% is what we're seeing. Interest rates. Obviously, the Federal Reserve has said that they are going to start raising interest rates. They just did by 0.75%. And what that means is that borrowers are going to be taking more of a step back and not borrowing as much, which means that lenders are not going to be making as much. And if there's not as much money on the table on that in that industry, then there's less money to play with as a whole, and that can cause other frustrations in the market. Again, I just wanted to show you guys a visual indication of what that 8.6% looks like as far as CPI goes. What we're seeing is numbers that we haven't seen since the 1980s, the early 1980s. If you look at 1981, December of 1981 is the last time we saw something around 8.6%. But like I said before, inflation is really currently around 12.6%, which is something we haven't seen since October of 1980. And if it starts going above what we saw in the 80s, we're going to see a real crisis here. And not to like try and scare anybody, but we are in a recession, and a lot of economists are afraid to say that for fear of losing their jobs, for fear of being mocked publicly. But no doubt about it, what we had in the 80s was a recession, and the numbers that are being thrown at us now prove that we are in a recession again here. I was reading an article earlier, and I'll link this in the description below as well, about the great inflation in the 1980s. Well, from the 1960s, mid 1960s to the early 80s, and what they did to stifle that inflation. But what I gathered from this is that really all we did as a country was kind of kick the can down the road. We didn't really fight inflation in a necessary way that is going to have lasting effects. And that's kind of what we're seeing now, combined with everything else that we've been hit with in the past couple of years. You know, the whole fiasco of COVID-19, the whole war that's going on in Ukraine, you know, these investigations between political parties, all of these things that can cause a crisis has combined into this great storm, this perfect storm of creating inflation, creating all of these bubbles in the housing market and things like that. And it's caused a lot of other effects in many different markets, and the crypto market is no different. It's tied to all of these other things just like any other market is, because of all the venture funding that has been thrown into this market. So I don't think that the crypto market stands on its own anymore like it used to. I definitely think that it's tied to a lot of other factors now, and that's what we're seeing. David Gockstein posted a tweet earlier that I wanted to share with you all because this is really what we need to be focused on. He said, all right, going to stop talking about Bitcoin for an hour and go work out to stay mentally focused. Bully still has no legs, and he's saying the bull market has no legs currently, or the bulls have no legs. The bears are still in control of this market. But essentially, what he's saying is he's going to go and focus on something entirely different for an hour, go work out, and that will help him mentally and physically stay strong in times like these where the market is doing crazy, crazy things. And I encourage everybody else out there to do the same thing. Go out there and do something that you enjoy. Stay active, keep your mind moving in different directions. Don't focus solely on the market and making money or losing money, regardless of what it is that you're currently doing. That's not healthy. So get out there, stay focused on something that makes you happy. And that's what I wanted to really focus on today in this video. I hope that it helps some of you, gain some clarity on things that are happening right now. And thanks for watching, guys. If you enjoyed it, please hit that like button. If you haven't already subscribed, please hit that sub button. It helps me grow my channel in more ways than you know. That's going to be it for this one. Crypto Clay out.